Morning all. Hello, how are we doing, ladder? Morning, Diamond. Oh, sorry, I just get my massive bottle of water. I've got a 2 litre bottle of water, which I'm trying to get through. My New Year's resolution is to drink more water, keep hydrated. So I've bought a 2 litre bottle of water, basically, with a massive great handle on it and a straw. I'm finding it very difficult to lift the thing. 2 litres of water is really heavy when you're trying to drink it up, pick it up and drink it. But anyway. So if you hear me slurping, that's what it is. Right, excuse me. So let's start off with a look at the news. Yeah, as Diamond's just said as well, a new version of the opening range Breakout EA reminds me I need to launch my other MT4s. Is now out this morning, which has got the break-even functionality in it again. So I took the break-even functionality out of the EA because in my testing, I didn't actually find any advantage to using it, but actually in hindsight, retesting is actually not a bad feature. The moving average stop really doesn't make any difference, but the break-even one actually, when I've been retesting the old set files, none of the ones without break-evens work, which does actually prove to me that break-evens do help with the risk minimizing. So risk mitigation rather. So I've added that back. So that's out this morning. I published some set files last night. I will be doing more set files today, which is just a case of redoing them basically for the new version because all the input variables have changed. So I'll push more of them out, but there is more out there. So if you look at the set files page and backtesting page, the ones that I've retested are up there. So there's 3 for the DAX and 3 for the NASDAQ. Which one is it? These are MT4 only at the moment. I haven't done MT5, I will do. But the MT4 ones you can load into MT5. It's just instead of saying true or false, you'll get zeros and ones. So you just have to click on them and change them to trues and falses. But I think it still works with zeros and ones anyway, because that's how the logic works. But you can get those, download those now. The results are ever so slightly different to what you'll see here. So where this has done 18 grand profit on a 7 grand drawdown, you'll find that that will be slightly different and that will be slightly different, but all in all, it's very close. So, but I will be pushing loads more set files out because these are obviously all the old way it worked and the new way it works with the new re-entry system. There's a hell of a lot more possibilities in there. So yeah, anyway. So we got 6 minutes to the open. So it's non-farm payroll day. So this afternoon's live room is going to be brought forward to 1:30 or 1:20 rather. So I'll be going live at 1:20 this afternoon, not 2:20 ahead of the New York Open. So I'll come on for employment change and obviously non-farm payroll. So 2 important figures coming out for the CAD later. We've got the CPI figures, which is the flash estimates for the euro this morning at 10 o'clock as well. So we may get a bit of volatility around that depending what they come out as. These are only flash inflation estimates. And the reason they're orange is because we get CPI figures, hard and fast CPI figures every month. And these are just an estimation of what they think the annuals are going to be. But the annuals are released annually, and obviously they are accurate. But these tend to be pretty accurate. So they're kind of a bit of a leading indicator, but they're not the hard and fast. It's like the, buy the rumor, sell the news type thing. This looks like where we're going, but it's not actually necessarily where we're going to end up. So we might get some volatility off of it on euro pairs. We'll see. But this afternoon, obviously, it's all about the US and the CAD. And obviously, we've got PMIs as well this afternoon as well on the US for the services. And obviously, the manufacturing PMIs came out on Wednesday, which were as expected. So I'm forecasting today that we're going to see positive figures across the board here. Reason being is we had positive figures across the board here, and these are all related. They are not guaranteed to be positive, but you have to look at the logic. If unemployment claims are down, it means there's less people unemployed, so the unemployment rate should be up. If there's less people claiming, that's because they've probably got jobs. It isn't always that case. People die. There's all sorts of other things. People retire. There's lots of other things that happen with the claims and unemployment rates. But typically, if there's less people claiming benefits, there's more people got jobs. That's always good for the economy, which tends to be good for a currency. So from a fundamental perspective, when you're looking at the scorecard, that's one of the things that we pay attention to is the unemployment rates and the change in the unemployment rates. These have a positive effect. Looking at the US and obviously Canada, previous rates, when it works, where are we? Unemployment was 5.1. Unemployment change went down there, and with the US dollar, we've got 3.7, and it didn't move last time. So if we're going to see a positive impact here and a positive impact here, we had a positive impact here last time. So if we get a double positive on the US and the CAD, we should see some serious movement on the US and the CAD this afternoon. So I have my pound US dollar short on at the moment, which I posted in the Telegram group this morning. I have protected it this morning just to lock in this profit in case we come up and attempts to retest this propulsion gap this morning. So there is a possibility this morning they'll push up. First of all, obviously, there's liquidity sitting above these highs, which is a double top, which is an obvious target for the markets if they need it. But also we've got a large propulsion gap. And obviously we know that propulsion gaps get tested. Yeah. So there is a high probability, I think, of retesting that this morning. But if the market is predicting US dollar strength this afternoon, then we may get some speculative longs coming on the US dollar, which means obviously we may well just push down today and leave this propulsion gap behind and maybe come back and test it a bit later on. So I'm protecting it just in case. If it gets up here, I will probably get back in again ahead of the news, with the anticipation of it being positive. So I'll take $100 odd profit or whatever. I'm sitting in 0.25% at the moment, and then I'll add back. Yesterday closed out. What did I close out yesterday? So that NASDAQ trade yesterday that I took, I closed the rest of that out here. You know, we just had the choppiest, hideous, both sessions, DAX, Frankfurt and New York were just choppy as you like. Look at it. It's just, there's your opening range there. And all we did was we popped our head out the bottom and we just did that. Literally just did that all day. So I got into longs, which stopped out. I got into shorts, which just didn't go anywhere for the entire session. And the EA is programmed to close positions out at 10:30, and it did, at 9:30 rather, UK time, and it did, and that was it. I was out. So I out at a break even on that. And obviously I had a loss on the NAS in the morning, in the afternoon, beginning of the afternoon. So it was just a double-ended stop run on liquidity yesterday. There's nothing you can do about it. It's just crap. Other than that, I closed out an oil at break even. Unfortunate that was. So I got into an oil position. We pushed up. We pulled back straight into my stop, and then it went on. So this is what stops do. And this is partly why I removed the break-even stop from the opening range breakout EA. This is a prime example of what happens when you use a break-even stop. Market structure. Push, pull, push, pull, push, pull. If you move to break even, you will get broken even. You don't lose anything, obviously. It protects any moves against you, but it also makes you lose all your winnings. So it's a double-edged sword. So, use it. If you're going to use a break even, in my opinion, your break even needs to trigger a good distance. We want to go let's go break even when we're really far. We're up here somewhere. Now let's go break even on it. And then hopefully any pullbacks aren't going to come back and take us out. But the whole premise of market structure using support and resistance means if you get a breakout and you take it, there's a massive probability it's a retest support. That's what market does. That's what market structure is. It's a retest of support and resistance. So if you move to break even when you've got a breakout, you are support. And that's where it's going to target. That's what it does. So, but anyway, I got stopped out on that. Pound US dollar, banked 400 odd on that one there. And that was the first position on that. And then I added as we broke here. And obviously I'm still in this one here. I'm not going to trail this. I'm just going to lock it in, basically. I don't want to trail it down because we're going to get a pullback at some point before the news. So I'm just going to leave it on the. My hope is we don't come and retest the Asian highs and take me out. And all we do is we accumulate today, and then in the news we collapse. That's why I'm break evened, not break even, locked in. So that was me yesterday. Didn't bank much yesterday. I've got New Zealand dollar CAD long. Hasn't gone anywhere. So I got in, I've been in and out of this thing and it's just not going anywhere at the moment. Sentiment is on our side. We'll have a look at that in a minute. But yeah, long on that. I've got the oil longs on at the moment. So with oil, I got into that one yesterday. Obviously, as we just said, I just broke even on one yesterday. I've got that initial one there. So basically the play is the double bottom bounce here. We've just done a liquidity run on that low yesterday and pushed up. I've got a pending order set to add on a reversal alert on the hourly today. So if we get that rally on oil today, at least to come and test this propulsion gap, I'm going to be adding to the position. If we can get anywhere up towards ADR today, that'd be fantastic. We will get some movement on oil off of the US news. But I don't suspect it'll be massive. But we'll see. I'll either stop out on it or I won't. Other ones, pound New Zealand's driving me up the wall. Got in on Tuesday. I'm still in. We haven't gone anywhere. So just sitting in New Zealand, in pound New Zealand. Aussie New Zealand, same thing. Got in on Wednesday. I'm sitting in it. We're not going anywhere. That was an ADR scalp. And Aussie CAD. It's in profit. It's just not really going anywhere. We've got this propulsion gap holding here. We've got a lovely big propulsion gap holding here. So basically we've got the battle of the buyers and the sellers from these propulsion gaps. One of those is going to win today. Hopefully it's my guys. See what happens. But that's me. And that's news. Overnight, not a lot that I could see this morning. I did have a quick scan through this morning. We got massive negative industrial orders for Germany. Blimey. Market's open, by the way. So there's your opening range going in now. Let's quickly look at those euros just to see if anything's. No real impact off that. Good positive moves on the euro this morning, which is obvious because obviously there's massive negative news for Germany, which is one of the biggest players in Europe, and obviously it rallies. So, Russia to press big firms for more cash as war costs mount. Oh dear. I think they'll be brought down by the economy before they're brought down by anything else. Japan. More bond sales. Again, positive yen. Donald Trump to be the House Speaker. Oh my God. Okay. Bullard, likelihood of a soft landing in the United States has increased since the fall of 2022. Again, they're forecasting in the US a slightly better recession than previous. So again, all bullish. Everything we're getting coming out of the Fed at the moment is hawkish. So is more slowly than the markets anticipate. So they're saying that we're not on top of inflation yet, which is again saying interest rates are going to go up, which again is hawkish. US, it's all bullish. Everything is coming out of the US at the moment is bullish. So that's good. Opening ranges in. I'm short DAX. Morning, Alex. Morning, Sampliu. Morning, Potgaiter. Morning, Stevie. Back in Spain from the grim UK, rained every day for 2 weeks. It's lovely and warm over here now, and it's not raining. You literally picked the worst 2 weeks. We've had hideous rain. So yeah, bad timing, bad timing. Yeah, opening range, so short at the moment. Right, let's have a look at where we are from a movement perspective today. Now, obviously, because today is non-farm payroll, we tend to, a lot of the time, get fairly quiet London session because the market wants to just sit and rotate and wait for the unemployment figures to decide whether they're going to add more into their US longs or not. So we might find it's fairly range bound this morning. How wide that range will be, don't know, but we'll see. So don't expect a massive amount of movement this morning. We can get surprised. So the other thing they will do on days like this ahead of non-farm payroll is they will reach for liquidity. So if you see pairs screaming for highs, highly likely you'll find a load of limits sitting there, which will push it back down again. So anything you see double topping or double bottoming is likely a liquidity run ahead of the news as well. So it's difficult on non-farm payroll mornings, but we'll see. So far, there's no ADRs. Obviously, we looked at all the weekly ranges yesterday. They're still intact, still in place. Nothing's really changed there. But nothing's hit ADR so far today. So fairly quiet Asian session. We've got nothing to look at on the RSIs either. So CAD yen is up at 4-hour extension still. I'm waiting for it to get up to here. If we can get up to there, that would be lovely. Somebody posted in the Telegram group about something. CAD Swiss, we'll have a look at that one in a sec. David posted. And Euro CAD extended, just coming out of extension on the 4-hour down there. Not really much of a. I mean, it's really, really hard this one to pick a support resistance. That's kind of the most supportive, resistive area where we've had a bit of a tussle. Other than that, there's not really anything else. So we are kind of retesting that now. Sentiment on Euro CAD. It's range bound. So yeah, do what you like with that one. Difficult to tell, isn't it? So yes, there's nothing to look at on the RSI extension. There's no opportunities there at the moment. That CAD Swiss. So I said in the Telegram group this morning with this CAD, got to be a little bit careful with the CAD this morning because obviously the CAD is dragged often by the US dollar because it's the biggest trade partner. They've got a lot in common with exports and things. So when one economy does well, you tend to find the other gets dragged. It's a little bit like the relationship between the euro, the pound, and the euro, and the Swiss, and the Aussie and the New Zealand. So close proximity countries do a lot of trade and tend to move around a lot together. So be a little careful with this one. It does look like a good potential double top at the moment. So looking at the hourly. But you need to think if we're going to get positive CAD unemployment and positive US unemployment this afternoon, we're going up. So might be a quick, nice scalp back down to retest this, but it has already retested twice, this propulsion gap. So this propulsion gap here is part of the move that took out these highs. Yeah. So we've retested that, buyers have stepped in. We've retested it, buyers have stepped in. So there's obviously buyers here for the Canadian dollar ahead of the unemployment. So mean reverting this is a tricky one at the moment, I would say. You can see obviously we're here, we got that propulsion move. Yeah. They step back in on that propulsion move as well. They step back in on that propulsion move. So we are very bias long on that at the moment. So be careful if you are shorting it. Not to say it won't work, but how far it will go. I mean, the entry was this morning in Asia. So if you took the entry in Asia, you're in it, obviously. But you see what I mean about break-even stops? This is a prime example of a break-even stop issue. You get in here, it retests, it pushes down into profit, you break even, and it comes up and retests what? It retests support that broke and becomes resistance. So you're going to get taken out. And this is my issue with break-even stops and why I don't think you should use them. But they have an advantage with things like the opening range breakout EA, where if you are trying to grab a fast, hard move of momentum, which we know we get when the opening range breaks, which is the whole premise of the strategy, if you get stopped out because it does that, it's not a problem, is it, at break even? Because what happens now with the new EA, you get back in again. And that time, when you move to break even, because you're taking the same trade, it's unlikely they will come back and retest this level because they've already tested it. So that's why I've introduced it again, because I think there is legs in it going forward. So we will see. So too short on that account. Too short on that one as well. So this one is just taking single ORBs. Three different strategies running. I'm going to vary these strategies more as well. It's something to do over the weekend. But... Right. So other than that, there's nothing else to look at. So what I planned to do this morning, because I knew there wasn't going to be a lot here, was just have a look at obviously the fundamentals. Nothing. The thing with this is nothing really changes from a day-to-day basis much here, apart from the strength of the buy and the sell, because obviously the majority of this scorecard is taken up by this information here. So this information changes monthly. This information changes weekly. This information changes hourly. So the only real impact you have on this scorecard from a bias perspective is every week we may get different positioning, and that doesn't change a lot. It may flip from it'll flip usually by one point at a time. So a -4 will become a -3, a -2 might become a -1, for example. You're not going to have something go from a -4 to a +4. It just doesn't happen that way. It takes longer for them to get out their positions. Whereas retail obviously can flip from being a +2 to a -2 in the period of a day. So this is what's really impacting these scores. So you'll find that these will become, let's try and find a 2. So a 2 there, if we get retail sentiment go completely long on CAD yen, short on CAD yen, we might get that turn into a +4, which will turn it into a buy. So it's worth looking at this a couple of times a day, maybe beginning a London session, beginning a New York session, just to see what has changed on it. But overall, this sentiment really isn't going to change a massive amount. Your intraday sentiment obviously does change by the hour. This yesterday, I'm pretty sure, was flipped the other way. We had way more shorts than we did longs here on the euro US dollar. And the beautiful thing now is, which is absolutely lovely, is everybody is now long euro against the US dollar. What have we got this afternoon? US dollar news, which is predicted to be positive. So that lot's going to be dead later. If that happens, obviously. I don't know if it's going to happen. But, so from a sentiment perspective, New Zealand dollar CAD, still massively short. I've got my New Zealand dollar CAD long on, waiting at the minute. Just going back into positive territory, but we've not really had any movement, have we? It's been New Zealand dollar CAD has been long for ages. We've pushed up, we've come back down again, we've accumulated, just waiting basically. So I'd like to get back up into there. that for me was $700 profit. That's $350 profit. I will probably take, if we can get an ADR hit on that today, I'll probably take it. But hoping for positive CAD news. Obviously, that would drive. Sorry, no, I don't want positive CAD news, do I? That's a problem. Yeah, I might have to break even that actually ahead of the news. Just thinking about it. Obviously, that's the thing you need to bear in mind. This is going to change. So the bias on the New Zealand dollar CAD may well change on that sentiment this afternoon, depending on what comes out. So I have to see on that one. Diamond, DAX gap filled. Yes. So gap was somewhere around there. Morning, Seymour. I was running set 3 with 0.5% risk. Not sure we'd get much movement with non-farm payroll. Closed first position out at TP. Cool. Yeah, I mean, you can manually intervene. You know, don't have to let the EA run. There's, you know, I'm working at the moment on a set file for scalping, M5 scalping, which I used the other day in the lesson thing. So this is basically designed to get in and out fast and just grab a quick profit. And I'm going to adjust. I'm going to test the TPs on this. So I'm looking for probably a 75% of stop TP, a 150, and then a runner. Getting in quick, basically. So I'm testing this, and obviously I want to use the break even on it as well. So that's another thing to test with a scalping strategy. So, you know, there's nothing with your 5-minute opening range. We quite often get that very fast, hard move, don't we? You could get in with a very high risk on that and just take that and be done. If you can do that 4 days out of 5, you're going to make money. So there's so much testing to do on this, and we know it works most of the time with pretty much any settings, but I'm just trying to find a variety. I want one account running a scalp. I want one account running a runner. So that will basically have wide stops, and it'll be going for those home run days. And I'm not going to get many. I'm going to get 2 or 3 of those home run days a month, but those 2 or 3 home run days a month are going to be worth 10 to 15K. So I fully expect it to lose most days, but the days it wins, it's going to make a fortune. This one, I fully expect it to win most days, but it's not going to win an awful lot of money. And then I'll have a sort of a hybrid, which are the set files that I've been using at the moment. Some days you get really good wins, some days you get losses, some days you get mediocre wins, some days you get mediocre losses. Overall, averaging out over a year, it's 50, 60K profit. So if you can run 3 of them, 3 different types of strategy on the breakout, every day you should have something good. You know, if you lose for 3 days on the trot on the hybrid, it might be because you had a choppy start and a massive pop, and the runner will make you a fortune. And, you know, the scalper will have 2 or 3 days where it will lose, and the hybrid on those days will perform. You'll have a month where the scalp will work 18 out of 20 days. Those months you're going to clear up. You're going to take it out. You're going to buy a holiday for the family. You know, you've got to have that variety of strategy there, because it's not going to do this every day. But the days it does this is, you know, where we milk it. So, and that's what my testing is all about. I'm trying to find variation, variety. I want days where it doesn't matter what happens, something's going to make money. When you're running on prop, bear in mind you want to be drawing money every month. So if you've got one that basically has had a break-even month, that month you can't get paid. So you need another strategy that will have had a good month, that break-even month. You're going to have months where it's going to blow the account, potentially, aren't you? Those months, you need to make sure some others are working. So, but yeah, so, you know, for me, it's just time. I was saying to somebody in the MQL5 who was talking to me in the chat system in MQL5, I was saying I'm cash rich, time poor. I'd much rather be time rich and cash poor. I'd rather be time rich and cash rich. That's the ideal. That's the goal, isn't it? Working 1 hour a day, making tons of money, and having the rest of the day off. That is your goal. But for me, time is the thing that I can't buy. I was running set 3. Oh yeah, just read that one. Right. So I'm just watching this. Now, which one is it that's got the target? That one. Oh, okay. Yeah. Okay, so closed out on this one. This is hit target. So that was 356. Target is 375. Again, difference is commission taken off. So it banked at 370, which was target. Obviously 375 it saw, and then it banked it, and by the time it had actually closed, we'd lost $5, but and then commission taken off. So this one's done for the day. I'm just going to cancel that pending off. Actually, no, I might leave that pending there. I'm going to let it run. So that one's hit target. We'll see how we get on with the others. Right, so don't like those wicks. Any pairs anybody specifically wants to look at, let me know. Just going to do a quick rundown of everything, basically, and see if there's anything at decent levels that we can have a look at that lines up with our fundamentals, either from a range-bound perspective or from a buy or a sell, because obviously we've got no ADRs and we've got no RSIs to look at this morning. So US 30, yeah, I will go through oil and the indices first. So oil, I'm long on it. I'm hoping I'm not going to regret this. I fell out with oil before Christmas. The reason I'm in it is because I've been seeing lots of news about that's hawkish. Basically, there's every institution under the sun is calling for $107 a barrel on WTI. So I'm thinking the market is going to listen to general consensus. The market is going to start to buy it up, and I was hoping for a rally. We got negative news on barrel counts, so that didn't help massively. But it never does pay much attention to that anyway. But yeah, so this support here is where I was looking for a reversal. We didn't manage to get the follow through yesterday, didn't get the momentum, and we're pulling back down this morning. So we will see. If I stop out on this, I will probably just call it a day, because oil is a bit of a mystery to me. It's very erratic, and it doesn't seem to pay attention to anything anybody says, whether it be positive news, negative news, sentiment, or whatever. So I'm finding it hard to time this. We are in a downtrend at the moment. We're in a downtrend on what should be moving up from a fundamental perspective. Hence, this is the buy. Yeah. So what I was looking for from this peak formation low that formed was that. Yeah, so that was your down and then was an up. What we got was a double top. So I was aiming for there. Let me just draw that again. So that was where I was aiming for initially. Market structure should have gone here. We didn't. We double topped, and then we absolutely collapsed back down into support. So if this is going to be the market structure, this is where we're buying. Yeah. So either the market structure is going to play out bullish back up into these highs, into this resistance, or something else is going on and we're not. And if we're not, I'm out. If we are, that's the trade. Yeah. So we'll see what happens with oil, but everybody's calling it bullish, and it just doesn't seem to be able to get anywhere. Pound yen, I'll have a look at that as well. DAX, Very difficult to tell what the hell's going on. At the moment, obviously, we've had 2 strong bull days. So this is New Year. This is us opening this year, and we've gone basically. So DAX is off on a mission. FTSE's off on a mission as well. FTSE's rallying again. Again, divergence on the FTSE and the DAX, which again makes me worry slightly about the DAX. These tails I don't like. Got long wicks here, which means that there's a lot more buyers in the market at the moment in the last 15-20 minutes than there is sellers. So yeah, we've got divergence going on again on the DAX and the FTSE. FTSE is absolutely flying. DAX will usually go with it. We didn't yesterday, and we're not today, which means either the DAX is right, and the FTSE will push and then drop today, or the FTSE is right and the DAX is just going to stall, flag, and pop. So difficult to tell where we're going at the moment. We're in a bear market, we know, but looks pretty bullish and has been bullish since September. So whereas obviously the other indices in the US, we've had that bullish. So that's UK. We're still very, very bearish on these. So difficult to pick a direction on them, but it doesn't concern us if we're scalping intraday, because it doesn't matter what it did yesterday. We haven't quite tapped yesterday's low there. So we've got a lovely support potentially here. If that breaks, yesterday's low, if that breaks, we're going to get a nice run today, I think. But it doesn't look like it's breaking at the moment. So yeah, so NASDAQ and everything, we're bearish in a bear market. Everything's coming down nicely. There's that symmetrical triangle yesterday. Remember, I drew this symmetrical triangle in and I said this is going to break. There's the break. 1, 2, 3, 4, 5 break. So that was good. Straight down into support and bounced. Again, propulsion gap. Big propulsion move up. That's not a very good propulsion gap because there's no accumulation before it, but it came out of a previous propulsion gap there, look. Yeah. This is the beauty of this indicator. It shows you where the liquidity is, shows you where the big moves are, where the money is in the market. Again, there. So we're stuck in a range at the moment on the US indices, no directional bias whatsoever. So we're waiting for a break. Obviously, today could be the day. We've got non-farm payroll. So if we get a big, strong move on the US dollar today, the indices are going to come down hard. So there's a good chance we might get that break today and that bear market continuation. When that bear market starts to continue, when we get this break below, the market is going to go, right, we're still bear, and we're going to get people piling shorts on. So we'll see. But at the moment, there is no direction. Everything's a little bit out of whack, isn't it? So gold came down yesterday. Like I said, yesterday morning, was it? Or whenever somebody asked about gold, I would be a seller on gold, although we're in an uptrend at the moment. If we're going to get that US dollar strength and everything's hawkish on the US dollar, this is just a US dollar cross, we should be seeing bearish price action. We've had a fairly weak US for a few months. Not weak, but not as strong as anticipated, which obviously has allowed gold to pop. We've still got the export embargo on Russian gold. Russia stores the vast majority of gold in the world, so it's locked away, which you would anticipate supply and demand would push prices up. So supply and demand with things like oil and gold at the moment doesn't seem to be happening. This is Russia invasion. We can't get any more gold. There's less of it available. Quick, we need to charge more for it. What happens? Gold price collapses. Doesn't make any sense, does it? Nothing makes much sense at the moment in this world with literally nothing but interest rates driving everything. So yeah, it's pushing at the moment, but I would think we are looking more like pullback on a new leg down, unless something changes, obviously. But I don't trade gold either. So, take everything I say on gold and oil with a little bit of a pinch of salt. Take everything I say with a pinch of salt. Right, so that's the indices covered. Little directional bias, really, anywhere at the minute. DAX still pushing. Just want to see how close I am to target on this second account. Oh, not that one, this one. Handing off hard this morning. I would imagine we got a strong US this morning. Yeah, nice moves on the US dollar. So we are just up at highs at the moment. We might find that this starts to weaken a little bit because we're just taking out highs and lows, obviously. I'm really torn with this pound US. I kind of want to bank something ahead of the news. I'm going to reduce stops. That's M5, isn't it? Let's have a look at M50. Yeah, I'm just going to lock a little bit more profit in on that. So we're not. Doesn't look like this morning we're going to come and challenge this this high here, this propulsion gap and the highs of Asia. When we get down to yesterday's low, however, we might find a load of limits trigger, which sparks a move back up into this area. So I want to take it off. I'm just going to keep locking this profit in. In fact, what I might do is trail it. So I'm going to trail it from yesterday's low to that high, which is 500. Whoops. So I'm just going to trail it 500. If I'm still in it when the news comes out, fine. That's awesome. It can fly for me. But I'm just going to trail that. I'm just going to quickly post that in the Telegram group for anybody that's not in there. Okay. Right. Let's start at the top. Okay, what? No, let's start with the yens because Seymour wants to look at the pound yen. So let's go run through all the yens. Start off with. I can't filter on. Might as well add a filter for pairs just so I can filter out all the yen pairs. I will put that on my list. So looking at all the yen pairs, Aussie yen range bound, CAD yen range bound, Euro yen is a buy, pound yen is range bound, New Zealand is a buy, and US is a buy. So it's very mixed bag across the board. The problem with the yens is the interest rates. So if you look at historical interest rates for the yen, I've got a spreadsheet somewhere. What have I done with that? Fundamental spreadsheet. I don't know. I've got a spreadsheet where I put all the oh, there it is, historical interest rates in. Here we go. This is it. Oh, there you go. Perfect. So yen. Look at the interest rates on the yen. Minus 0.1. We're going back to 2016. I didn't go further back than that because it's clear they do not change their interest rates. So this column here obviously just doesn't change. So when you're looking at interest rate differentials with the yen, you can't really get any fundamental bias from them, because the interest rates for whatever you're looking at against the yen is always going to be a positive. Yeah, always the differential is going to be higher than the yen, because the yen is always a negative. So the only time you'll have a positive differential, i.e. you will have this being more in bias for the yen, is if something went to negative interest rates. Yeah, and everything is positive interest rates. So the differentials are always going to be positive towards the pair against the yen. So it will be a +1 long for something yen. So you can't really take that into account when you look at these yens. The only thing you can really take into account is the fundamentals from a sentiment perspective. So looking at all the yen pairs, what's the market positioning on them? So institutions have no bias on that one. They have no bias on that one. Ever such a slight bias on that one. No bias on that one. New Zealand, they're long. And US dollar, they're long. And euro, they're long. And that's why we've got these biases long on those pairs. And it's predominantly based on what the market is doing from a positioning perspective. So with the yens, I don't really want to trade them unless we see sentiment completely offside. So I want institutions onside, and I want sentiment completely offside. So I want to see +6s basically on yen pairs or the intraday sentiment. So if we haven't got a +6 or a -6, we haven't got them at the moment, that's got a yen pair in, I'm really not interested in them. And as far as I'm concerned, you can trade them in either direction, but my bias would always be on the short side because of intervention. So we know they're notorious for intervening and pumping the yen when they're not happy with the rates. So I would love to take shorts on everything. So for me, as I've been saying all week, I'm looking at highs. If we get to a double top and I see a double top reaction, I'll take a reversal alert there on the short side, but I don't really want to buy it. I don't really want to buy the US dollar yen, and I don't really want to buy anything because, you know, every time the US dollar yen pumps, what do? They push back, they intervene, they pump back the other way, and they make sure that you are not going above that 150. And if you come and try and get anywhere near that again, we're going to intervene and push it back down. And the US dollar is what's driving that intervention, but it obviously affects every pair. Every time they intervene, they all go, obviously. So only looking for shorts on these levels. Obviously, we're looking, that's you cannot deny supply and demand, support, resistance, whatever you want to call it. So this is a good spot. It's reacted around that area 3 times now. So where we are at the moment on Aussie dollar yen, if you're looking long term, I would be saying this at the moment candle here is showing signs of weakness. We got massive weakness at this level, we know. If this paints as an inside bar of that candle, I would say pending orders under the low, or just take the next reversal alert, even better, on M5 or M15, which will be here. Go short. And assume that we're going to break out to the downside. So entry would be kind of somewhere under there with the reversal alert. You could add a second one there. You could even add a third one on a break of that outside bar, assuming this stays as an inside bar. The thing you also need to be aware of is when we get positive positive US dollar news, we often get the yen dragged along. So money flies into the yen as well. So we could well see yen strength coming through this afternoon as well. So that's not a bad looking short. CAD yen is very much in the same position. We have actually put a lower low in there. And we're not putting in a higher high at the moment. So higher high, lower high, lower low at the moment. And again, we're up at obvious support, resistance, but we haven't hit it. So again, ADR hits to the upside on yens, I'll be looking for shorts. RSI extensions to the upside, I'll be looking for shorts. support and resistance, I'll be looking for shorts. Swiss yen, same thing. Not really going anywhere at the moment. Just see what DAX is up to. Just retesting lows on the DAX. Again, this is much further away, the Swiss yen. We are up at this resistance, which we had a previous reaction, but it didn't hold. Bang through straight into that. Very undirectional at the minute. Euro yen, again, want to see it up there. This is a long euro yen from a technical perspective, just because the euro is more bullish, as is the US and the CAD. Pound yen, nowhere near. We've got a potential double top opportunity there, but again, look at where this is. Is there any reason whatsoever why we should have turned there? No, it's just where this propulsion move finished. I would suspect that is what we're going to look at, and then somewhere around here we'll be looking for shorts. New Zealand yen, again, it's got a long way to go. So you can see that none of these really are any good, apart from the US dollar yen. But I wouldn't want to short the US dollar today ahead of non-farm payroll and potential positive unemployment figures. So it doesn't make any sense, does it, to go long, to go short on this one. So this is the only one that's actually set up perfectly for a potential bounce, and it's the only one which potentially fundamentally is going to pump this afternoon. So no trade. So you can't really win with anything yen at the moment. But pound yen, it's a very difficult call. We've obviously got the propulsion move here. So if you could look at this in detail, so we had the accumulation, propulsion. That's where we push back up to there. So there's your propulsion gap. And look where it came back and tested exactly to the pip where the propulsion gap is. The sellers went, nope, we're short. Look at us, we're short. We are short. Pushed it back down into new lows. We've pulled back up into a lower high. So there's potential for this to go either way, either retest double top, which I don't think it will, but it may do, or down. But again, US dollar strength could well pump the yen this afternoon. So again, looking at this from a double bottom perspective, if you drop down to something like M15, where are we on the 4 hour? There we are, that's that level there. Not a very good level at all, is it, actually, to be honest? I'd much rather look at that or that. But yeah, again, pound yen. You look at what you're just about to get, a reversal alert. So what have we got here? We've got a high on Wednesday, a lower high on Tuesday. So far today, Wednesday, Thursday, so far today, Friday, lower high. If you get that reversal alert in there, stop above that high, because that's where the liquidity is sitting from the last 2 days. It's either going to go, add, or it's not, stop. But if you're going to take this as a position trade, you've got there is your next obvious spot, and that is going to be roughly 1.5 ADR away. So you've got potential there to get a good 3 positions in for a bounce up in the 24.72 area and come back down. So that's all your yens. DAX coming down. Have I hit target yet on that one? Not quite. Tom, just want to thank you for teaching us how you think, like how to think like traders. It's okay. If you want to be a trader, you've got to think like a trader. Right, Aussies. So predominantly the Aussies, is again a mixed bag, more negative than positive. So forget the Aussie yen for the minute. Look at everything else. So Aussie US, massive sell. Aussie New Zealand, massive sell. Aussie CAD, bit of a sell. If we get any retail sentiment on board, that's a sell. Aussie Swiss, range bound. Again, a little bit more retail sentiment will take that to a -1. So everything Aussie, you want to be looking short at the moment from a fundamental perspective. So I'm short Aussie CAD. We got this beautiful double top, which has pushed down. We're now sitting back down on the 24. So this is potentially where we are going to bounce from, if we're going to. Again, Aussie CAD, New Zealand CAD. Aussie CAD I've got a short on, which is if we get CAD positive news is going to help me. New Zealand CAD, if we get positive CAD news, isn't going to help me. So I'm kind of hedged at the minute if you look at my exposure. So with the Canadian dollar, I'm hedged in both directions. So it doesn't really matter, does it, which way it goes? I'm going to stop out on one and I'm going to make a profit on the other. As long as I've got positive risk reward, I can't lose. So I don't really care where it goes this afternoon. Ideally, I'd like it to push the CAD, stop me out and TP me on Aussie CAD, not hit my stop loss on New Zealand CAD and then bounce back the other way and put that back into profit. But hey, we can hope. But yeah, so obviously we're in a temporary uptrend, Aussie CAD. It's a very choppy sideways mess, this one at the moment anyway. The Aussie has got potential strength coming with the news that oil, I was thinking oil and coal. Coal exports can start again from Australia into China, which will massively boost their economy. But it's how much and when. So at the minute, we are still bearish Australian dollar. So we're up at highs, obviously. You want to buy at highs and sell. Or you want to sell at highs, obviously, and then take these moves back down again. So that's why I'm short. And I'm hoping that we are going to retest and challenge this support and resistance area. So this area here. Yeah. I'm hoping that we're going to come back and test this, which is where my TP is on this one, which is 125 ADR. So if we get strong figures on unemployment on the Canadian dollar, easy 125 ADR move, that'll be out on that one. But obviously, if those are really positive figures, yeah, there's no reason why we won't just start the next leg down. Aussie dollar Swiss, bit of a sideways mess at the moment. Yeah, Aussie dollar Swiss, sideways mess, range bound. Really have any bias or anything on it. Aussie New Zealand, I'm short. Again, this was it's just not moving. Nothing I can do about it. So it's a tiny little risk trade, and I'm not too bothered about it. I will scale into this one, Aussie New Zealand, if we push up any more above there. If we come and challenge those highs, I think we'll probably find liquidity, limit orders sitting at the highs. So if we can get up there today, I'm not going to take another position there. It's far too close. But if we do push up above this level, I'll add again. But I only add one. I just want to try and get this down, basically. You know, Aussie New Zealand, since here, when the fundamentals shifted, hasn't looked back. And this is basically a pullback, I think, on this move here, which is a 50% retracement. So that's why I'm getting interested here at this resistance. But we'll see. And obviously, if that pushes down, I'll TP on it, and then I'll wait for a pullback to jump back in again. Aussie US, again, Aussie US is the bias long. Sorry, sell. Aussie US. This is one of the strongest sells out there at the moment. We're still not getting any movement on it, though. So basically, just keep selling the highs, looking for RSI extensions on the hourly, and jump in short. Yeah. So jump in short, jump in short, jump in short, jump in short, jump in short. Just keep jumping in short. It's biased short. You just need an entry. So either ADR hits to the upside, which is what that one was, or any RSI extensions, which that one also was an RSI extension, but it was also an ADR, that one. So that's 166 off of a 92. So you would have got an alert on the ADR dashboard on that one. Go short. But yeah, shorts at the moment, assuming we get continuation strength on the US dollar. If we get good unemployment this afternoon, obviously, yeah, it's going to be good. And obviously, we had the good news on the job openings, and unemployment claims. So it's all good. Everything's coming out positive at the moment on the US. But you know the US, you know the Fed. All it takes is them to come out and have one horrible comment, and they'll go the other way. They'll collapse the US. They're stupid. Amit, is there any correlation between Germany 30 and the S&P 500? No, only in the respect that it moves. There is. The DAX you want to be trading in the morning, because the Germany 30 is obviously German stocks. German stocks move in the Frankfurt session and the London session. They contain the Germany 30 or 40 is it is now. Why these brokers won't update their symbols, I don't know. But Germany 40, there's 40 stocks in various sectors. So with stock market, you get two different ways of movement. You either get individual stocks being purchased. You get sector purchases. Yeah, which is where institutions will be instructed to purchase the oil sector, or the electronics sector, or the medical sector. So in COVID, for example, when we were going, right, we need to get a vaccine together, all of the biotech stocks rocketed because everybody bought bio stock. So when you buy a stock sector, that stock sector will have, those stocks will be contained within, there'll be German companies in there, there'll be UK companies in there, there'll be US companies in there. And those US companies could be in the Dow Jones or in the S&P, or both. So if you get a sector buy, it can affect all indexes at the same time. If you get individual stock purchases, it can affect an individual stock index. But you get volatility purchases as well. So at the New York Open at 9:30 a.m., they will do a load of purchasing in stock market, and that will affect mainly the US indices. But you will find the DAX will move at the same time, because those people that are doing sector purchases at 9:30 in New York will also be buying things that are sitting in the German DAX. So the DAX will move as well, which is why you see on the DAX volatility at New York Stock Open, which for me is 16:30. Yeah. So there you go. There's 16:30, and we got a massive move down. Right. And if I look at the US indices yesterday and what happened at 14:30, you got a massive move down. So the DAX will get dragged along with these. These will get dragged along with the DAX. Yeah. So look at what's happening this morning, and look at what's happening with the DAX this morning. So the correlation is there. We're just coming off of support. See, this is where I want to manually close positions out when I'm seeing this. This is something that I can't teach the EA to do. I can tell it to find a support level and say, if you get a bounce off of support, close the positions out. But a bounce off of support isn't necessarily going to do that, is it? All it is limit orders firing. Whether those limit orders firing are going to get eaten up by selling pressure and we're going to just pop straight through it and rally, do I want to get out here? Again, that's a personal decision. I can't teach the EA to think like I'm thinking at the moment. What I'm thinking at the moment is I really want to tighten my stops up. Which is what I'm going to do manually. Oh God, where are my stops? It's really hard to see your stops when you've got multiple positions on. So those stops are based on that one. That's that one. So stops are there. No. I wish it said what stop losses were in MT4. It's really annoying. What am I at? 441. Some there. Right, I'm break even. Okay, so I'm break even. I can't lose. I'm just going to let it run. I hit target on that one. No, I didn't hit target on that either. So that's the danger, obviously, if you are short on the DAX at the moment. Bear in mind, obviously, we got non-farm payroll this afternoon. We could just rally range. Obviously, you can see there's a lot of limit orders triggering here. If we get a reverse alert on it, we've got more buyers and sellers. So we'll see. But obviously, limit order trigger doesn't mean the buyers are taking control. It means that a lot of these sellers are exiting their positions. Don't forget, a limit order is two things. A limit order is a request to start a buy position, or a limit order is a request to exit a short position, i.e. I'm short, get me out here. So when you get limit order buys, and obviously this is why support and resistance exists, is because you've got orders triggering at these levels. You don't know how much of this candle here that is triggered, you don't know how much of that is new entries long or exits short, i.e. profit take. If that is new entries long, they haven't done a very good job, have they? So we'll find out if the sellers are still in control. We've also got a nice propulsion move there. Mind you, it's all part of one big drop, isn't it? If you look at M15, this is not stopped until here. And this candle's not closed yet, this M15 candle. Yeah, we've got another 2 minutes left on this candle. At the moment, what's happening is we are just painting a lower low and a lower high. Market structure still bearish, isn't it? So until we break that high and close above that high, this is still a bear move. So don't just jump ship. I have looked at programming something like this into the EA, but you're getting into very complicated logic, aren't you, with that sort of stuff? It's kind of personal preference as well. You know, this is where your discretionary part of trading comes in. So to answer your question, Amit, can we select one and stick to it? Yeah, select what I would do, and what I do, as you see in here all the time. I trade the DAX in the morning, and I trade the NASDAQ and potentially the Dow. I stick more to the NASDAQ now, but I trade the NASDAQ in the afternoon because you get more movement off the NAS in the afternoon. So look, if you look at the movement yesterday on the DAX at the New York Open. There. So that's New York Open yesterday on the DAX. Look at the New York Open on the NASDAQ. A lot more volatility to the downside. Yet this is a bad example because it was awful, the movement yesterday. So this is a better example. So there's your open. There's your opening 15-minute range. There's your move. And then if you look at the DAX, yeah, very little on the DAX because it's the New York stock market open, not the Frankfurt European open. So you're better off from a volatility and a movement perspective. US dollar yen RSI highlight, we don't want to be trading that short. Yeah, so you want to be trading US indices in the US session, and you want to be trading either the FTSE or the DAX in the Frankfurt London session. So pick two indices, one to trade in the morning, one to trade in the afternoon. Make sense? There's a button on there. Right, completely lost track of where I am, but that's fine. Where was I? We've done the Aussies. We've done all the yens. CAD. So CAD Swiss, bias wise, range bound. CAD yen, obviously is range bound, but I'll run through all the Swissies basically. So CAD Swiss is range bound, pound Swiss range bound, New Zealand Swiss is a buy, US dollar Swiss is a buy. So a little bit mixed. So CAD Swiss basically, I would expect potential movement to the upside. The thing with the Swiss franc is when it wants to go, it goes, doesn't it? We know that it's a complete beast when it wants to actually trade hard and fast. We're in a massive downtrend on the CAD. This has been mainly linked to oil prices coming down, and obviously a weak US dollar. That is starting to change. So and especially if we get decent unemployment figures this afternoon on the CAD, we'll probably see some positive movement. So although at the moment this is a kind of sell, it's obviously range bound at the minute. There is no fundamental bias from the institutions on it. Retail sentiment, everybody's long CAD Swiss. Must get this sorted in order, mustn't I? Everybody's long CAD Swiss, so it's a massive sell for me, CAD Swiss. But I don't want to do a massive sell at the moment ahead of news. So these guys are probably right at the minute. Again, you can't. This is why you can't just use this on its own. You've got to think what's happening. Yeah. At the moment, everybody's long on it, which would say we're probably going to drop. But any other day, absolutely fine. Today, we've got news coming out. Now, bear in mind, obviously, this news could come out negative. Yeah. So the unemployment change, or the unemployment rate, has been positive, positive, positive. Positive, positive as expected. Slightly negative. Jesus, look at the size of that. That's a big differential, isn't it? But yeah, so looking at these figures overall, there's a lot more positives than negatives, isn't there? So assuming everything's going the same way as it was before Christmas, no reason why it shouldn't be. We should see either coming out as expected, maybe a slight negative or a positive, which should be good for the CAD. So I don't really want to be disagreeing with these guys at the moment. If everybody else, institutions and fundamentals are all disagreeing with these guys, yeah, we're going to just jump on and go the other way, aren't we? So don't really want to trade that one at the moment. The other Swissies, Euro Swiss is an absolute mess. It's sideways, horrible. It's a buy from a fundamental perspective because we've got COT on board, but that's really the only reason. 4 out of 5 of this score is made up of COT. So literally buy every low. You haven't had an opportunity to buy this thing on the 4-hour RSI since November. On the hourly, you've had a couple of opportunities to get in here, here, here. It's assuming you're using the 30, obviously. I prefer to wait a little bit longer, ideally, but there was a buy there, so you had a buy, possibly a second position. You had a buy there, possibly a second position. Obviously, you got in there. There's no other real opportunities you could have got in at these lows, but you can obviously see we're range low. Right now, we're sitting middle range. So what don't you do? Trade in the middle of a range. Nothing to do, is there? So yeah, that's Euro Swiss. The other Swissies, we've got the Pound Swiss. Again, sideways. Bias on the Pound Swiss is range bound. There's no COT. There's just no advantage anywhere on it. So pick a number, pick a direction. It's just not going anywhere. So I would look at this low potentially for a buy. We didn't get down to this low for a buy. There's just nothing to do on it. It's just rubbish. New Zealand Swiss, sideways mess at the minute. Very tight accumulation on this one. So if you look at the fundamentals on it, it's a buy, but it's only a buy again because of COT. So we know we've got the big players on our side on this one. So institutionally, let me just quick look at the DAX. Stalling out down here. So we're just sideways at the moment on this one. So you got one or two things you can do here. You can either short these highs or long these lows, but because we've got COT on our side long, we really want to be looking for long opportunities. So this yesterday down here was where you wanted to sort of get in, but obviously we haven't gotten anywhere. And there's not really much distance to go, is there? So if you're going to get in on a trade on this, looking at an M15 alert like there, you haven't really got much opportunity for a long. You can get out obviously somewhere up at ADR in that propulsion gap, for example, but not really great opportunity. The best opportunity on this one, I think, is when we break this range. So for those of you that know Wyckoff, okay, you could potentially, I think, take that low as well. We've had a big down movement. We then go into an accumulation. So we're looking for a spring trap to fire, which is basically where we take out the low of the range. There is liquidity there. There is liquidity there. So if we get down to this level or this level, so for example, if we got an ADR alert to the downside on New Zealand dollar Swiss, that's what I would look to trade. But a breakout of the high, again, would be a good opportunity as well. So when you're looking for ways to get in, you're looking for reversal alerts on M5 or M15, anywhere down towards the lows, aren't you? You could take any one of these. And if you want to position trade this, you can get in now, because this could go at any time, couldn't it? You get in now, and then you could scale in down to ADR. So worst case scenario, wherever you get in or wherever you have got in the last 2 weeks, you're still in it and you haven't taken it off because it hasn't gone anywhere. And we're waiting. So you could get in there, and if it does push down into there, you add a second position. And up to you then if it does break to the downside for any reason, whether you want to stay in it or not. But not a lot else you can do with that. And US dollar Swiss is just all over the place. But I'd rather long it than short it. But it's just all over the gap at the minute. Any pullbacks into propulsion, long. ADR hit to the downside, support, one along. So look at this move. Look at where it pulled back to. Look at this move. Look at where it should pull back to. Yeah, if we're going to use propulsion gaps, this is where these buyers from yesterday are going to add into their positions. If we go and take that liquidity out this morning, there's potential for them to try that move. Non-farm payroll is notorious for going the wrong way. You get positive figures come out and it tanks and everyone goes, what the hell? How can it possibly go down? It's all positive news. All they're doing is they're taking out liquidity, moving it away, enticing everyone short. Everyone puts their stops at the high and then they go, nah, and off they go with it. So that's where they're going to do it from, because this is where the buy move started. So anything can happen in non-farm payroll. We know that. We'll see what happens. So that's all the Swissies. Thief. I don't know how to pronounce your name. Limited, I can call you, can't I? Thief Limited. Which of euro or US dollar has more influence on the DAX? The euro, obviously, on the DAX, because the DAX is priced in euros. The US dollar is priced in dollars. The DAX is priced in euros. The Nikkei is priced in yen. It's all priced in the currency of the stock market. It's Frankfurt, it's Germany, it's euros. So when we have a strong euro, so for example, prime example to explain that, what's happening with the DAX this morning? Coming down. What's happening with the euros this morning? They're going up. When we get a pump, if we get a pump on the US dollar, the US indices will come down. It's inverse, basically. There are ways as well to trade divergence on it. If you see the US dollar pushing hard up and you see the stock indexes pushing hard up, something's wrong. One of them is going to reverse hard and sharp, which you don't know, though. That's the problem. Anybody trading divergence on indices or on currencies in any way, shape, or form, something's coming. You just don't know which is, again, brings me back to my mantra I say in here all the time. We know it's going to do one of two things over a period of time. What it's going to do, we have no clue. No one does. So even if you get an advantage of divergence, where you get US dollar pushing and indices pushing at the same time, which one do you short? Short both. One of them is going to be wrong. So you can do a hedge in that respect. Nasdaq's just taken out yesterday's low. S&P is nowhere near it. Dow's nowhere near it. DAX is coming down. So we're just retesting today's low on the DAX, and we're retesting yesterday's low. So this is what I mean by the So what I was explaining about this order, the orders, these limit orders that triggered here, we now know that these limit orders that triggered here were not buy orders to start long positions. They were buy orders to exit short positions because the market is still short at the moment. Now, if this now does this, we know that they were buy orders. But right now it looks like the sellers are still in control. So we've just taken out that liquidity. Now, this could also be a trap. Everybody that saw this got in long. They've just been liquidated. You see what I mean? You know, when people ask me, are my indicators all related to smart money concepts? The reason I don't like smart money concepts as a word, as a term, is there is no such thing as a concept of smart money in my opinion, because even if you go, well, that's a liquidity run, your odds are still 50-50, right? So there's nothing smart in that. There's nothing smart. All it is taking trades at support and resistance. So right now, I know for a fact there's one of two things happening. Either these longs have been liquidated and the shorts are going to continue, or these longs have added to their positions and we're going to go up. That's all you know. There's nothing smart in it. There's only two things. The market is a binary thing. There's only two things that can happen, up and down. Where it goes up and down from is the unknown. So you can't time it. You got to just take every opportunity. So right now, that's an amazingly good trade. But the odds of it working are 50-50. It's just that the upside on this trade is much better than the downside. Whereas if I go on a pending short here with a stop above the high, my downside potential is probably not as strong because we've already done that and the market's tired. And this is why everybody tries to catch the falling knife and everybody tries to mean revert, because the assumption is tiredness or something is cheap. This isn't cheap. This is coming down. Something's not going well in the stock market at the moment. You don't want to be trying to buy this necessarily, but you don't know. It could be a good buy, could be a bad buy. Don't know. But this is why this sentiment index works so well, because these guys that are short on the Swiss yen are trying to get on at the very high of the movement up. It's going up for a reason. And this is why retail gets killed. Strike rate is high. Anyone can get a 50% strike rate, but your risk reward will make you a negative sum trader. So, but anyway, we'll see what happens. It's a good lesson watching this stuff. The DAX and US indices seem correlated, so I wonder if the US has more influence. Yeah, they will both have, but like I just said a minute ago, like I just showed you a minute ago, the US indices will move more in New York than they will in Frankfurt, and the DAX will move more in Frankfurt than it will in New York, because the US dollar is not being manipulated as much in London as the euro is. So there's more money going through the US stock market in the afternoons. Why? Because the stocks are being bought and sold. So the US dollar will move more. That's what it is. It's all related. Like London is the central hub of foreign exchange. 80% of transactions in the entire world go through the London exchange. But there is a much bigger volume of US transactions go through New York in the New York session, but just not as much as London, because London is time-wise positioned better for the entire world. London is open when everybody else is around. London's open for part of New York. It's open for part of Asia. You know, it's open for everybody, whereas New York is a little bit more cut off. We're all at home having dinner when New York's going into its lunchtime. So nobody in London and the rest of the Western Hemisphere is trading in the New York session. So But you're right. Yes, the US dollar does have an impact on the DAX, but that's mainly because of sector purchases. So if you have a sector purchase happen on a load of stocks in the New York session, some of that sector purchase will be on stocks sitting in the Germany 40. So let's say, for example, motor. So someone, a big prop firm or a big hedge fund or a big pension fund says, we want to invest in electric vehicles. They will buy up GM, BMW, Volkswagen, whoever, whatever. They'll buy the motor sector. BMW and Mercedes are in there. So if you're going to buy at New York, the motor sector, you're going to be buying DAX stocks. So yes, it will. And you'll be using US dollars to purchase those stocks, which means that the US dollar value will be affected by it. It's all interlinked. You don't need to, don't pay too much attention to it. The more you get into the intricacies of how it all works, the more you realize it doesn't really matter. If you've got a strong US dollar, you just want to be selling all indexes. But sometimes it won't work. Same as everything. So don't get too bogged down in it. That would be my advice. Euros. So looking at the euros, we've got range bound and buys. And we've got a couple of sells. Obviously, that's a sell because of the US dollar. That's a sell because of the strength in the New Zealand. But apart from that, the euro is expected to be fairly strong. Lagarde has been very, very bullish on everything euro. It's starting to go well. It's looking like the recession is not going to be quite as bad. Inflation is forecasted to go up probably faster than most of the other countries because they're so far behind with inflation. So again, coming back to looking at the key fundamentals, the euro inflation is the second highest in the world at the moment, which means that they need to really get their interest rates up to get on top of inflation. So if you look at where we are with the euro, we're sitting at 10.1, just behind the UK, and look at how far behind the euro is with interest rates compared to the rest of the world. Yeah, lagging massively. So they have got catch up to do, which means prolonged interest rate increases and potentially larger interest rate increases or sustained 0.5% increases when everyone else goes to 0.25%, which means that that becomes more attractive for investors to put money into, which means that the euro pops. And Lagarde is saying nothing but, we're going to carry on doing this until this thing gets down to at least 5%. That's going to take a long time. So euro strong, but not as strong as obviously things like the US. So all these euros, I would be looking more for buys. You can see, obviously, if I flick through them all quickly, pretty much green across the board. Yeah, everything's green. So we are long euro. New Zealand, not quite as much. Again, strength. US dollar, still green, but expected to be dropping. But the thing you've got to think about here is you've got a strong currency against a strong currency, which tends to cause range-bound activity or very slight trends in either direction. So buys on everything with the euros. Again, lovely bounce off of support there. Missed that one. That was the bounce there. So any pullbacks on euro odd, be looking for longs. You could get into that pretty much now, to be honest, I think. We've got this resistance here, and that propulsion gap to play with. So that when we break through there, I think we'll be off. So if we do get a pullback on it, I mean, look at market structure on this. Yeah, I mean, it's a long at the moment, so kind of missed that one. Euro Swiss, choppy mess. Again, look at the ADR, 54. Aussie New Zealand, Euro Swiss, US dollar Canada, very tight because they're major trade partners. You don't get a lot of movement in price. There's a lot of balance in the price. Unless there's one in, this is where the Swiss announced their interest rate increase, which nobody was expecting. That's why that happened. But other than that, you're usually pretty sideways on Euro Swiss. So, but looking more for longs than shorts. Again, just really, it's just so wicky. Look at the wicks on everything. It's just so hard to find any real levels on it. It's just, you got to buy it and sit in it and wait, and it's such a low ADR, it's not worth bothering with. Same as a euro pound. Most of the time we're sitting sideways. Euro pound is more of a buy definitely at the moment. So I'll be looking for support bounces. We missed there, the area I've got drawn in. Don't see any reason why we shouldn't break the highs and keep going. So looking for any kind of pullbacks. So we're looking for RSI extensions on the 4-hour, RSI extensions on the hourly, or ADR hits to the downside for potential longs. Covered euro yen, euro New Zealand at the moment. That one bias wise is probably range. Yeah, so it's range bound because we've got a strong New Zealand. It's actually a little bit more negative because of the strength in the New Zealand at the moment. But New Zealand's been strong for a while, so that's probably going to start to wane. Blue, anyone know a simple to use position size calculator? Yeah, there's one in the group. It's called Money Manager Graphic Tool. So you stick it on your chart and you hit B to buy. Whoops, B to buy. It basically does that, and then you can adjust your risks and rewards, and then that's it. It does that, and it calculates your lot size for you based on risk and all sorts of stuff. Just play around with it. It's in the group though, so it's called Money Manager Graphic Tool. So if you go into the Telegram group, go into the Files section and just search Manager or Graphic or Tool or Money Manager Graphic Tool with underscores. If you want to be really precise, you'll find it. So yeah, Euro New Zealand, a little bit range bound, more long than short. So again, on this one, be looking for any kind of pullbacks. We've got a nice propulsion gap. I know we haven't. It's kind of tested and gone, isn't it? So that was the trade on Wednesday. Again, if breakout, highly likely. So you can take a breakout trade if we pull back. But again, you know, this thing's not moving at all at the moment. DAX is still trying to go down, not getting very far. A lot of wicks at this level. So there's a lot of buying at this level at the moment, but the sellers are still in control at the moment. Euro US dollar. So Euro US dollar is very difficult because you've got two currencies which are potentially strong at the moment. So I think with this one, really, you can play it in any direction, but I'd much rather, I don't know what I'd rather be, to be honest, on Euro US, thinking about it. There's no sentimental advantage from COT. So all the fundamentals at the moment are on the US dollar's side. So this really is what I would use as the driver looking for shorts. I want to see the big players really come on side, and obviously time trades with sentiment. But I don't think with the Euro US dollar, there's much you can do in either direction. So kind of pick one at the moment. Obviously at the moment we're pretty bullish, but look at it long term. I mean, this is obviously where we've coming out of COVID. The euro has been absolutely destroyed. Its economy was closed for such a long time. Unemployment went through the roof. They're just stuffed, and they are still a bit stuffed, but they're putting things into place to get on top of it. But then again, so is the US dollar, which is why I think we're probably going to find more of that type of movement moving forward. So very hard to pick a direction because it's the biggest traded pair out there. It's the most highly liquid instrument you have. So you can pretty much get in on any extension you like, and you'll be usually guaranteed a pullback because there's so much volume going through it. So I don't really think it matters at the moment which way you trade this one, but fundamentally, it's more on the bearish side now than it was. If unemployment figures come out as a positive for the US dollar this evening or this afternoon, it's not really going to change this, is it? Still the same. So it's going to be negative still. So there's nothing that's really going to change this. Right, so unemployment change was actually better. So we may find that suddenly becomes a negative or a zero, which makes this a slightly stronger sell, but we'll find out later. So erring on the side of short on it, especially now we've broken this low. Yeah, so this propulsion move has been invalidated. And as you can see, the sellers who started this move stepped in and batted back down every buying attempt. We've still got this area here, and we've just obviously taken that low out. So I would suspect that sort of movement. Or literally just that this afternoon. But then we want to be looking for pullbacks to get in short. So this area here, after the news today, that area there, let's assume the news is positive, probably down to somewhere there. That's where I'd be looking for the short entries. Looking for reversal alerts up there. That's the euros. Stalling down here. Really tempted to take this off. I'm going to leave it for the minute. This is the trouble with watching charts. Your humanness takes over. I know the EA's got an edge. I should let it trade, but my being, having watched this thing for such a long time, is telling me this is struggling now. We've got an outside bar gone in. So whatever comes after this outside bar will give us an idea as to where we're going. So I'm going to just keep an eye on that. Right, so that's the euros. The pounds at the moment, obviously looking at the pound from a bias perspective, we're negative across the board on the pound. Yeah, so we've got two strong sells, which is obviously because the New Zealand is strong and the US is very strong. We've got negatives on every pound pair out there. So from a COP perspective, we have got a little bit of longs left in there, but at the moment, not a lot. There's not enough to make a real positive move on it. Everything fundamental really is against the pound. So there's nothing really that I'm interested in longing on the pound. So I'm just looking on everything pound for short opportunities. So any RSI extensions to the upside on the hourlies, on the 4 hourlies, any ADR reversals from highs on the day, that's what I'm looking for basically for everything on the pound. So where we are at the moment, obviously with these, we've just had that resistance invalidated there. So you could kind of get in anywhere here, but there's, it's just not going anywhere, is it? In a minute, we're in a symmetrical triangle. Again, if we drop down to a lower time frame, we're spoiling for a fight at the moment. It's going to go at some point, but right now you could take you could put a pending under there, pending under there, pending under there, pending under the low of the day, pending under the weekly low. If that goes, you're going to make a lot of money. So yeah, that's pound odd. If also bear in mind we get the news from China that yes, we are going to open our doors to exports of coal from Australia, that's only going to strengthen that. So moves down. Aussie CAD, same thing, expecting potential CAD news to be positive. That is the propulsion gap that broke the low. been rejected 3 times now. We're not interested in going above that level. So if you want to get in on a pending under there, go. Reversal alert wise, you had the alert in Asia. Go short. Pound Swiss I've covered, pound yen I've covered, pound New Zealand. Mess. Short this. Oh, it's moving. It's actually moving, which is good. So yeah, pound New Zealand, I'm short. I'm struggling down there, aren't we? Yeah, this is an absolute mess at the moment. Really tight contraction, but obviously we've still got a stronger New Zealand than we have a pound. Obviously, as you can see, that's why we are red on the moving averages. We're moving down. Yeah, look at the chop. It's just utter chop. And even when it's not chopping, it's got massive, horrible wicks on it everywhere. So very, very hard to trade. The reason for this one, I think this was an ADR. Was this an ADR hit? Yeah. So I got in on this because it was an ADR hit. We got a 260 pip move. It's a 172 ADR. So I got in on the reversal alert there somewhere. On, was it M15? Can't remember. But anyway, or did I get in yesterday? I don't know when I took that. I'm going to take that pound New Zealand. 4. I got in here, I think, on M5. Doesn't matter where I got in really, but yeah. So pushed down, pushed up, looking for new lows basically. So yeah, like that short already on it, and pound US dollar. I've got my short on this. So at the moment, I've obviously just taken that one off yesterday at the lows. We plowed through, bounced up, accumulated, dropped. We've put a new low in. So we've just taken out yesterday's low. As you can see, we've got some serious wicks going in at the moment. So there's a lot of buying starting to show, but it's still going down. So I'm trailing this at the moment, short. What I'm basically hoping on this trade is that I'm just going to stay with my 50 pip trailer until the news. So I'm hoping they're just going to go into an accumulation inside the London range. There's our London range at the moment. So I'm hoping they're just going to stay within the London range, and then the US news will come out positive and it will tank it. We'll see. Could you analyze a good long-term carry trade? Not really. No, I don't do carry trades. You have to tell me what carry trade is at the moment. I assume you mean something that just gives you positive swaps. I don't do that, so I can't really do that. Go to the website, right? Find something with positive swaps. Filter it for buyers and sells. Pick one of those. So if we've got positive swaps on New Zealand dollar yen, buy it, I guess. I don't really do that. I don't get involved. I might look potential double bottom GA. Yeah, you can do it. If you want to long it. I don't really want to long it though. So yeah, but analysis when I am talking about this is long-term view. There's absolutely nothing wrong with a double bottom on this. Yeah. So if this gets down to the Asian lows or yesterday's low, take a long on it and trade it back up into whatever. There's a propulsion gap there. If this thing tanks now down into here, You got a propulsion gap there that started that move. So play the double bottom up into there. Scalping wise, do what you like. Like I say, M5, it doesn't matter what you do. None of this means anything on M5. M5 is chop. M5 is institutional order execution. It does what the hell it likes. Really doesn't matter. So you can do what you like intraday. But intraday, if you're going to go intraday, try and stay in line with what the sentiment is. So you try and stay in line with the big boys, because if it is going to move intraday, these are the guys that are going to execute the orders to do that. And they're going to do it in the opposite direction of what retail is most of the time. So if you're going to trade intraday, this is your Bible. New Zealand dollar CAD, everybody's short on it. Yeah, everybody's short on it. All institutions are long. So who's going to be right? The guys with the money to move the market, or you and me? The guys with the money to move the market, isn't it? Because they move the market and they are long. And if they're long, I want to be long. So I just don't want to look at shorts. So intraday GA, you can, no problem taking double bottom on it. Don't forget, it's going to bounce. Everything's going to move at levels. The reason it moves at levels is because there is a load of institutional limit orders there. Now, that doesn't mean these institutional limit orders and retail limit orders that are sitting there are long-term orders to take this skyrocketing. It means that they are orders there to exit positions and start short-term speculative moves. And a short-term speculative move could be up to there. Yeah. If they get in with $100,000 there and they move the market up to there to make $250,000, that's it. They're out. That's what the purpose of these limit orders is not necessarily to make a fortune over the next 6 months. It's to make a bit of money and move the market up and down. Market makers, this is what they're there for. They're there to provide liquidity pools for traders. That's their job. They're not there to manipulate price. They're there to provide liquidity. That's the purpose of the desk, the market maker desk. But yeah, you can take that. I was too short on German on DAX, but I looked the chart, closed the position. Yeah, we're down, but it's like I say, I'm considering shutting myself because this is starting to slow dramatically now, which is very typical. We're finding buyers down here. Funny that, isn't it? I think I'm going to manually move these stops. I shouldn't really intervene, but I am. I don't care. It's my money. Can't tell what stops are what in this one. So bear with me a sec. 144.49. See, the stops are all sitting up there at the minute. This has got much wider trailer on it. I just don't want to I just don't want to lose the profit, basically. Don't forget, I've also got the option of re-entry. But we've got this is the third bullish candle in a row. So quick lesson in, I'd say lesson, but quick observation of market structure and candlestick patterns. Outside bar shows that there's buying strength and selling strength, but no distance, no directional bias. Spinning top, reversal pattern. Sellers couldn't take control, buyers couldn't take control. Equilibrium. So we got equilibrium candle, followed by equilibrium candle, followed by an outside bar, which is bullish. So we've got a bullish outside bar, meaning that there was more buyers than sellers because we ended bullish. And now we've got a higher low being put in and a higher high. Reversal pattern. It's a rounding bottom. So likelihood is this is where we're going to start to either run into an accumulation or worst case scenario, reversal, pullback or reversal. I don't know. I haven't got a clue. But either way, those last four candlesticks, does everybody follow that? Is completely bullish. Yeah. So market structure of a candle, you get a lower high, a lower low, a lower high, a lower low, and you keep going lower highs and lower lows. You might get a higher high and a lower low, and then you get a lower high and a lower low. It's all still bearish. But when you start to get inside bars form, and then those inside bars, the next candles start to form like that, and then like that, we're turning. Yeah, now look at it. The reintroduced break-even feature, does it put each order at break-even or all the open orders is considered and placed at break-even? It's per trade. So the break-even, oh, that one, yeah, no. Oh, this is version 2. Hang on, let me just open the chart. I'm only doing the strategy tester. So the break-even stop is this one here. This distance is from your open. So if you have a trade there, in this case, 20 pips. So if price moves down 20 pips, it will break even that trade. Yeah. If it's taken 3 trades, for example, as we did here. So we took one there, and one there. It moves every individual stop. So when we push down 20 pips, that one will break even. This one won't, because this hasn't moved 20 pips yet. When we get down to here, this one will break even. This one that we took here, when we push down to here, may have been 20 pips, I don't know, but let's say it wasn't, it would push up and then it would push down to here. And when it gets down to here, it would break even. Yeah. And then on all of these positions up higher, your trailing stops will kick in. And your trailing stops will kick in dependent on what you've set for your trailing stops. So your trailing stops will be set to whatever they are. And these all trails per trade. It's not this is not a basket strategy. This is individual trades. The only basket type situations you have are, has my entire basket of trades hit my daily target or my daily loss? That's the only basket kind of conditions that the EA runs. Everything is done on a per trade basis, because a lot of people are just trading one. Like in this case, this is set up to just trade one opening range breakout. This will only trade the 5 minute. There is only one trade. It just does it on an individual trade basis. Can we have a session to trade the Germany 30 only dedicated during the start of the session? You just had it. Just done it this morning. What do you think I've been here for? I've literally just traded the DAX this morning in front of you. It's been trading. First 15 minutes to Germany 30 only. That's what I do every morning. I'm here. The reason I'm here at 7:50 every morning is so I can trade the DAX. I don't get up at this time in the morning because I want to. I can't get out because the market opens at 8 o'clock. Am I missing? I'm not misunderstanding you. What you're asking? That's what I do. I'm trading DAX. I traded the DAX 5-minute, 10-minute, and 15-minute opening range this morning, and I'm out, flat, done. And now, because I'm out, this thing's going to collapse and put in a 300 ADR move, and I'm going to miss it. But that's because I'm watching it. Or I misunderstood. If you're talking about trading specific strategies on the DAX, then just do it yourself. Yeah. Set this up to do whatever you want, and then go in here and press that button and watch it trade. See what happens. This is trading the 5-minute opening range, this setting. I've got this set up all weird, so I don't know what this is going to do. But there you go. So that's out with a loss there. It's got far too wide stops on it. Oh, I'm testing the break-even functionality. That's why it's doing this. There you go. That's made $800. Don't know what that did. This isn't set up in any way, shape, or form as a strategy, just so you're aware. Because the stop on it, look at the stop. Stop's all the way down here. I don't know what that is. I've obviously, I know what it was. I widened the stop because I wanted to make sure that the trades had an opportunity to go to break even. That's why I set it up like that. But if you want to test anything yourself, just test it yourself. Yeah, if you want to test the 15-minute opening range, do that. I've got one on 15, I think. Oh, that's the pre-market 15. So that's quite a good set far. So that trades the pre-market 15-minute range. Yeah, so this one is actually taking into account the 5, 10, 15 minutes before, and that's market open there. So we're trading the 15 minutes prior to the open, and we're taking this initial candle, the opening cash balance candle breakout. And then that works pretty well as well. Again, I've got it set up with break even. This is all broken because I've introduced the break even stop. I've got to redo all the set file. Choppy day. Oh, look at that. $2.5 grand profit there we could have had. 1,500 there. Again, this is not set up properly, so far too tight on the losses, but 2.5 grand. Three. Ended up with 16. Anyway, go and play with it. That's what it's there for. Develop your own. Yeah, something that gives you positive swaps like Euro Swiss or Euro. No, I don't trade anything exotics at all, Tom. I haven't even got Huff and Mexican. I don't even know what Huff is. What is Euro Huff? Hungarian forint. No. The reason I don't trade them is because of the spreads. And look at the volume. Look at the volatility and the volume on these things. Yeah. Look at this crap. It's untradeable. Longer term, I don't know. I don't know how you can trade this stuff because they don't have fundamentals. Hungary doesn't have its own fundamentals, and it obviously does have its own fundamentals, but it's not going to pay any attention to that. This is driven by the euro, the Huff, and you've got to make sure as well there's no peg. So is Hungarian, what's it, Florent pegged? It is not pegged to any currency. Yeah. So obviously, when you're trading these exotics, you need to make sure there's no peg. If they're pegged, there's no point in trading them because you might as well just trade the major or the minor. Doesn't make any difference, does it? So let's say, for example, this was pegged to the pound, for example. You're basically trading euro pound. For those that don't know what a peg is, it means that the currency is pegged and matched to another currency's movement. So when the pound goes up, this will go up equally. And which is what happened with the Swiss franc, which I probably haven't got data on. I don't think I've got data going back that far. Yes, I have. Maybe I have. Let's see. Where are we going back to? 2010. When was the Swiss franc peg removed? 2004, 5, 6, 7, 8, wasn't it? Oh, it's just before, I think. Oh, no, there it is. Sorry, there it is. No, 2015. No, it was that recent. So this is what happens when a peg is removed. Right, so the Swiss franc was pegged to another currency at $1. So you'll see this thing will never, ever, ever have gone above that price because it was pegged. They turned around, and this is why the Swissy is such a nightmare. They turned around and went, you know what? We're not actually going to track. I think it was the US. Was it pegged to the US dollar? It was, wasn't it? Or was it pegged to the euro? Can't remember. It was whatever it was pegged to. They said, we're not going to peg it anymore. The market collapsed. Virtually 50% of brokers in the world went bankrupt in seconds, mine included. I was trading with Alpari at the time, and Alpari went bankrupt. All the markets froze, everything stopped. Nobody knew what was going on. Everyone lost their jobs because the Swiss franc turned around and said, actually, we want to do our own thing. So if you're trading any exotic, and this used to be an exotic, the Swissy, if you're trading anything that is an exotic that is pegged, that is the danger. If you are trading with a broker that does not have negative balance protection, so if you were long this and you were trading with a broker without negative balance protection, i.e. Meaning that if your account goes into negative, you're covered, you would have been liable for that loss. That loss would have been in the millions if you had a 10K account. Yeah, so be very careful with exotics. Average movement on this is 88 pips. This thing moved 18,000 pips in a day. It came back, obviously, because that's what it does. But and then, obviously, it had the freedom there now to move and trade above 1 because the peg was removed. But you see, it still doesn't get there. Still doesn't get far above it, does it? We're always around the peg. Yeah, be careful with anything that is exotic. Just don't trade exotics. There's absolutely no reason to. You've got 28 Forex pairs that all move really nicely. Exotics quite often cost more to trade. The spreads are absolutely ridiculous. The volatility is completely unpredictable. And a lot of the time they're pegged to something else anyway, so you might as well trade the major. It just really doesn't make sense. What haven't I covered? I've done the pounds. New Zealand's, I'm long New Zealand dollar CAD at the moment. I'm toying with the idea of going flat on New Zealand CAD, to be honest. Just ahead of the CAD news, but I am hedged. I don't quite know what to do with this one because we're just sitting in the middle. Basically, this trade is going to be affected, obviously, by the Canadian dollar news this afternoon, one way or the other. So I'm a bit unsure as what to do with this one. But New Zealand dollar Swiss, I like it as a buy, and the reason I like it as a buy, obviously, is down to the fundamentals, mainly down to sentiment. The market is long, and the retail is on the wrong side, so it's much more likely this is going to go up. But obviously, that is going to be based on Canadian dollar movement this afternoon. The euro, it was pegged to the euro. Yeah, that's right. So the Swissy was pegged to the euro. I knew it was pegged to something. I can't remember which. Obviously, it wasn't pegged to the US dollar. If you look at Euro Swiss at the same time, I'm not sure if I've got data going back there. 2015. Yeah, I have. Whoa, what happened there? Here we go. That's a chaos. Everybody died. Everybody died. It was awful. You know, when something like this happens, this is what we call a black swan. So, if you've not heard the terminology black swan, this is a black swan. When you get one of these happening with your broker, what happens is your broker, all of a sudden, your terminal freezes and everyone goes, oh, chart's broken. So you try and get in touch with your broker. Your broker doesn't answer the phone. Your broker doesn't answer email. Live support at that time wasn't a thing. But if live support was there, they wouldn't be answering live support. And if there was, you'd be number 250,000 in a ticket queue. And what happens is all of a sudden then a message goes up on the website. The website disappears and the message says, this company has gone bust. Liquidators are being called in. And then you go through this process over a period of 3 to 6 months where you have to fill out forms to send to solicitors. Solicitors will then come back to you and say, I require proof of your positions at the time because I had positions in profit when the peg was removed. They didn't honour my TPs and stop losses, obviously, because there's no liquidity in the market. So I had to prove that they owed me money. And I also had to prove that I didn't owe them money. So I had to take a screenshot, and I did this. I went in here and I took a screenshot of my open positions in the chart, and I took a screenshot of my account history so they could see everything. A lot of people didn't, so you had no proof. And if not, then they had to go back to the brokers' systems and try and get that information. And you had this backwards and forwards to solicitors. And eventually I got paid out my balance. But one thing that I learnt from this, and it's a very important lesson, is you never put all of your capital with your broker. Because at that time I had 5K trading account and I had everything in that 5K trading account. And for 3 months, I had no money to trade with because they had it all. So I had to wait for my money to come back before I could trade. So I had to borrow money. Well, I actually put it on a credit card to start my account back up again. Which is why now I only put a percentage of my funds into my trading account. Because if something like this happens again, I've still got money in my bank that I can carry on with. Because it's a job. If you've got a 50K trading account, you put 50K with this broker and you get it frozen for 6 months, you're out of a business. So I put 10K in there and I keep the rest back. And if I need to top it up, I can do, but I keep less liquidity. Someone just said that we've got news coming up, evil, which is CPI, which is coming up in 1 minute. So watch your DAX. So potential euro inflation figures. In un minuto. Figures are out. Positive euro, potentially. I will get a notification in a minute. For some reason my notifications aren't coming through. Don't know why. 9.2, so it's a slight miss. 5.2 is a slight hit, so it's hit and miss. There we go, there's my notification. Yeah, so hit and miss on that. No real bias either way. Hence not a lot of movement. Flat. Right, let me just quickly whiz through these. So New Zealand's I've covered, haven't I? Because I was talking about the Swissy and the peg. New Zealand yen I've covered. New Zealand dollar, US dollar. Right, so we've had a very, very strong New Zealand dollar. as with everything, after you've had a certain amount of strength, the market has to have a rest and recuperate. We've also got potential US dollar strength coming through now and over the next couple of months with confirmed interest rate rises. So the US and the New Zealand dollar are catching up with each other. So there's no real bias. It is still negative on the fundamentals, but it's not massively negative. There's no institutional directional bias in either direction either. So which is why we've been sitting like this for a little bit. So I'd be looking more for shorts than longs. So ADR hits to the upside, RSI hits to the upside rather, ADR hits as well if you get any. But at the moment, it's still green. We are still long. But if you look at what's happened to the moving averages, although we are green, which means that we're bullish, the moving averages are flat and turning down. Yeah, so the 72 has gone flat, and the 24 is starting to turn down from a flat, which means basically we are range bound and making new lows. So we are ever so slightly bearish, but nothing to write home about on that one. US dollar CAD, again, close trade partners. They push and pull each other around. The bias on this is long, basically mainly from a COP perspective. Fundamentals are not far out at all on either of them. So you can really trade this one, I think, in either direction, but I'll be looking more longs. So longs at the lows. Any kind of pullbacks into propulsion gaps on lower time frames, you can sit and wait on propulsion gaps and take 5-minute reversal alerts or 15-minute reversal alerts long. And same with US dollar Swiss I've covered already, and US dollar yen I've covered. So that's it, covered it all. So this afternoon I'm coming on at 120. I'm still in my US dollar. My stop loss is now bang on resistance. We'll see if that holds up. Hopefully it won't come and test it. What's going on with oil? Oil's not gone anywhere yet either today. Just sideways, aren't we? So yeah, I'll be back on. So what I'm going to try this afternoon, a little bit of an experiment. One of the guys in the Telegram group, Shola, DM'd me about using the opening range breakout EA on news trading. So what I'm going to do is I'm probably going to use the Euro US dollar. I'm already short on pound US, so I'm not going to use that because I'm already short. Euro US dollar's got no sentiment. There's nothing really there's nothing with any real advantage apart from pound US dollar, which I'm already in, to trade. So most of the market is long Euro US dollar, so I guess that's probably the best thing to trade. So what I'm going to do on the Euro US dollar this afternoon, news is at 1:30. I wonder if US dollar CAD might be a better candidate for this. Yeah, okay. What I'm going to do is I'm going to trade US dollar CAD this afternoon. And plan is basically, obviously the news comes out at 1:30, which is 15:30 my time. Broker time. So there's where the news comes out. So what I'm going to do is I'm going to take the 15-minute range before the news. So where we are right now would be 1, 2, 3, and say this is the news candle. And I'm going to use that with the opening range breakout EA. So I'm going to set it up to trade whatever range we've got ahead of the news. And then the news candle, I'm hoping, will be a big old spike. and it's going to get me in. I'm going to test this with very small position size, because the thing that worries me about this type of strategy is slippage. So if I've got pending orders sitting here, and this thing, and we know on non-farm payroll days, you can have the candle that is like that. And the speed it moves, I may want my order filled here, I may not get it filled until down here, which means that my stop loss is going to be like that. But my stop amount, let's say $50, yeah, that I ask for with this pending order, if this pending order gets executed here, the stop, the risk is going to be stupid, isn't it? So it's a slightly worrying strategy to try, but I'm going to try it, because I think there's a possibility of there being another use for the ORBEA with some news events like this. And it's a typical strategy, isn't it? Straddle trading news. So I'm going to use the EA to do it. And the EA will then obviously just manage my trailing stops and everything for me automatically. So that's the plan for this afternoon, is just to watch the news and trade it a little bit. But I've got the pound US dollar on anyway, which is nicely in profit and trailing. So if that thing just keeps going, happy days. But if we get a negative Canadian dollar unemployment rate, and we get a positive US dollar unemployment rate, US dollar CAD is going to go through the roof. If they come out opposing, that'd be fantastic. If they both come out the same, we're going to get a bit of push and pull, aren't we? So there's a possibility of a whipsaw. But if we can get them one coming out as expected and one as a positive, that would be amazing. It doesn't matter which, I don't care. It's going to go one way or the other, isn't it? So it doesn't matter when you're trading an opening range breakout or a breakout of any kind. If you're straddle trading it, you're going to go with whichever way the market wants to go and take you. So that's the plan. So I'm not going to be around at 2:20 for the normal session this afternoon. I'll be around at 1:20 UK time, which is just before the news. And then if I'm still on, I'll see what happens. If I'm still on, I will trade the New York session as well. But I might be done by then. We'll see. Right, that's it. So anything you need, come in the Telegram group. This morning, I'm going to work on the set files more. I just want to get all those set files back up. So I'll be doing that this morning. And I'm just spending all my time at the moment testing and developing on the opening range breakout EA to try and find better and better set files and more diversity to trade with my accounts. So I'll let you know more on that as I get them. The more set files I can get out there, the better. But you can obviously do all this yourself. So, any good set files you find, anybody that's using it or testing with it on demo, whatever, let me know. And I will then take those and see if we can improve them any more. Assuming if they're good anyway, anything, if you can test it over a year and it's profitable, isn't it? It's just for prop. I'm trying to get my focus on prop is literally drawdown. All I'm interested in is the drawdown. I just want a positive return. And also not just the drawdown. I'm also interested in speed. I want to pass fast. So I'm looking for some set files, which is what I'm working on at the moment. I think I've found a few that will literally get you past an evaluation in 5 to 10 days. Or they will blow the account in 5 to 10 days. Because what we want is to get an account, don't we? And then you can use a normal risk once you've got the account. But it's just the speed. I'm just trying to develop EAs to just get me the accounts, and then using exactly the same strategies, just obviously flattened out to be less risky. So I've got a couple which seem to be passing in 5 to 15 days on average, somewhere in there. On a sort of 6 to 7 out of 10. If I can do 10 evaluations and get 6 of them passed, that's all I need. I just need something to get the accounts back. Like my E8, I lost an E8 account just before Christmas, but I can get it back in a day. So I want something that I can do that with. Being greedy. But that requires very tight trading stops. And this sort of movement. So this is a prime example today. This would have been a $1,000 to $1,500 risk trade. there. And as it moved, the trailer would have kicked in straight away, very tight, and it would have got me out there. But that would have been around about $2,500 win. On a 50k account, that's 2.5. That's over 50% of your target in one session. That's what I'm looking for. Get it hit, and then literally just trade out the rest of the days with small, tiny little insignificant trades just to get past the evaluations. I wouldn't do that on a live account because obviously it's way too risky. You get that happen 3 days on the trot and you've blown it, haven't you? So you can't risk that much. You can. If you get that 3 days on the trot, that's it, you're done for the month, isn't it? 7.5 grand profit. You've got to wait 2 weeks to get paid, but hey, you get paid, don't you? Steve, happy Three Kings. Not sure what that means, but Christmas, I'm assuming. You're a bit late, mate. This January. Mind you, it's Orthodox Christmas today, isn't it? For the, I think the Russians. I can't get it. Obviously, I'm not religious at all, so I don't follow any of it. But how can you have Christmas now? I presume it's basically the two versions of Christianity or whatever it is, or the churches, had an argument about when he was born. So somebody said he was born on that day, and someone else said, no, he was born on that day. And then they spread off in different arcs from there, I guess, with different ideas of which day he was born. But same thing, innit? Just pick a date, guys. Anyway. So yeah, Russia's called a ceasefire. Whether that holds or not. Good opportunity for the Ukrainians to smash the hell out of them, I suspect. But anyway, we will see. Right, so that's me done for the morning. Anything you need, come in the Telegram group. I will be back at 1:20 in 10, 11, 12, 1, 3 hours. Can't count. I'll be back in 3 hours, and then we'll trade the open. Trade the news. See what happens, and then we'll play it by ear from there. And if I'm on at the market open, I'm on at the market open. If not, I'm not. It is Friday. Friday's usually quite a quiet one. So, all right, have a good one, guys. Anything you need, let me know. Otherwise, I will see you this afternoon.